Testing, 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 testing. All right, looks like vocals look good. And we are live. So far, so good. Internet's still holding up. Okay, cool. All right, everybody. Good evening. Sorry for the delay here. Looks like I was forced to update a driver, which messed with OBS. But for those who are here or watching this a little bit later in the morning, thanks for joining in. Appreciate having you here. Appreciate you taking a look at what we're going to look at this week. So let's go ahead and take a look at what's going on, and we'll see what's happening this week to better prepare ourselves. So let's go over to the charts and see what we've got for this week. So Jay Whitway, what's up, man? Good to see you. Good to see you. Good to see you. How's your weekend been? Hopefully you've had a good weekend. And yeah. Hope everything's been treating you well. So we're gonna see what we got going on this week. So this week I'm only gonna be here on Wednesday, and small possibility that I'll be able to trade on Friday as well, just because I'm going to be flying out to Florida this on Thursday, so going to be enjoying a little bit of sun, a little bit of sunshine down in that Florida state. So going to be rainy in Virginia. Oh man, yeah, we might have like a day or two of rain, but yeah, we're fortunate that it's not too rainy. I'm hoping that the rainy and snowy season's done. I'd be totally okay if it's just warm, sunny weather the rest of this half of the year. But, you know, wishes is much, like nature doesn't really care about what I wish for. So same way how markets don't really care for what I wish for. So, all right, so let's take a look at this week. We have a lot of landmines this week. It's not going to be a fun week, I think, but what we've already seen is a continuation to go back into our consolidation range. But let's look at what economic calendar stuff can happen this week. Monday. I think Monday's going to be a tough day, but, you know, markets have proven me wrong. It has, if it's in a hurry to get in some place or direction, then it's very common that it will run. So typically the days after a really, really big run, or the day after a really big economic event, or a holiday especially, those are typically days that you don't want to trade, right? When not to trade, essentially. So there are really, really few, and I want to review this again for everyone here, but there's a few days that I really, really don't. I try not to trade as heavily as I can. So bank holidays are half days. You have to watch out for the day that follows. So of course, Good Friday was a huge holiday, so there's going to be a lot of chop, I think, if it plays out the way I think it is. Typically large overnight ranges, morning after a huge range day, you can wait for the PM session. If I see London take out Asia's highs and lows, that means that the market's just going into a kind of like take everything kind of a zone, kind of like a scenario. I think they call it, gosh, what do they call it? Where they take everything. Seek and destroy days. Yeah. So those are just a few of the days that I'm looking at things to really be quite choppy. Inside days typically are also quite choppy. The Thursday and Friday of non-farm payroll week. So this particular one, Thursday, if you're not done trading by 8:30 in the morning, 9 o'clock in the morning, be really careful on Thursday before non-farm payroll. Can we get moves? Yes. But generally, you'll find that Thursdays tend to be also quite fickle in the afternoon, especially. So be careful this week on Thursday. Now, we do have a lot of economic events happening. So Tuesday, you got JOLTS opening. Monday, you have ISM manufacturing PMI. Tuesday, JOLTS and FOMC speakers during the afternoon. Wednesday, you've got a lot of stuff here. You've got some medium and red items here. ISM services PMI, ADP non-farm employment change, which isn't typically a huge draw, but it sometimes can be. And then Fed Powell speaking at noon. So Thursday, once you get past unemployment claims, you best be careful for the rest of the afternoon, because this is going to be a not fun day to trade in the afternoon. But once you get past non-farm payroll on Friday, this is going to tell us where the month of April is going to go, I think. So this whole week, you have something really major that's going to add to volatility every single day. So we need to be careful with that. Crazy Sunday open. Yes, yeah, we'll take a look at that right now, actually. So we know that everything this week is going to be a setup for non-farm employment change, essentially there. So this is going to be the big kahuna this week. So watch out for Friday. You can trade after non-farm payroll, because generally you'll see, you'll have an idea, and you'll be able to look for non-farm payroll to reverse, typically 2-stage. It can be 3-stage, so you have to just be careful. Make sure you have your bias right, and we'll go from there. So let's take a look at the charts, though. Let's bring over the full page chart here. All right, so we have a new month. So we're in a new month. You can see where where March closed. We took out the previous close and high of the previous month. So we have this monthly candle closing up here. We still have this monthly gap down here. So so far we've opened and headed upwards first in this month. So generally, I have April as a bullish month. So I could definitely see us heading upwards and aiming for what? The previous month's high of 18708.50. I could certainly see us aiming for that, but we will at some point, let me zoom in a little bit here. At some point, we're going to take this volume imbalance out here, which, because it's right in the middle of a weekly, kind of like a new week opening gap. So I do think we're going to take this out. So us heading higher first in the month makes a lot of sense in April. Towards the end of the month, I anticipate we would probably start to head downwards to take out this fair value gap down here, or rather new week opening gap plus volume imbalance down here. And then, of course, you know, this no longer is a, we took, this used to be an old monthly gap, but you can kind of see how this wicked down below that and then headed higher. So monthly fair value gaps, very important. Even if they're dynamic, they will likely get taken out over time. So you have these here. You know that there's a likelihood that we will likely come back down here. You just have to wait for the right time. And what could be the right time? Well, you have this new high here that you're going to want to target. So this high of March being 18708.50, we're going to keep that in mind, okay? So let's take a look at the weekly chart now. So we have a new month, right? So this was the high back in the 3rd or 4th week of March, right? So this high is one of your new IPTA 20-day highs. So I'm going to also unlock this. I will, let me see what this is at. 18708.50 it should be. Let's just use this here. Okay, so we have this. I'm going to mark this as a daily weekly high. And we're going to extend this for the rest of this week. In fact, I think this is going to be referred to even further. So I'm going to extend this out to the end of April. So now we have that, and let me get rid of this Fibonacci here. Gamer X, yo, what you think is going to happen right now? I am in shorts right now. Can you look at the 1 to 5 minute chart? We'll get there in a moment. The goal of this call is to take a look at the weekly prep. Where do I think the week is going to go? And that is all I care about on Sunday. So we're going to continue forward with our weekly prep for now, but I can look at the lower time frame in a bit. So we have an initial expansion. This is the new week opening gap here. We have an initial expansion from the previous week of March as we begin the new week of April. We do have a tiny little dip down here. I do think that we're going to end up going down to take out that new week opening gap. That's a liquidity void where there's zero price that has been traded to. So if we are going to have a down week, then I would expect for us to trade higher first. And what are some targets we could trade for? Well, let me get rid of some of these here. I'm going to clear this chart so we can see a little bit more here. Oh, I'm going to have to clear it on the other charts. Let me do that first so we can get a nice clean chart here that isn't encumbered by any other thing, so we can keep it clean here and keep it fresh. Okay. I'm going to get rid of a few of these lines so we can chart fresh and we can keep it nice and clean for you on this week. So let's get rid of all of these things here that were from the last week that are no longer salient. And let's continue, and we'll keep everything on there that still could be salient, but for the time being, you know what? Let's just clear it all. So we can have a nice clean chart here. Nice clean charts. Okay, so back to this week. So we've expanded higher on Monday. So if this is an expansion higher, now keep in mind, this could just be the lowest that this whole week ever goes as well. Is it likely that we have a huge expansion up to one side or the other? Well, we have an inside candle here. When this happens, there's typically going to be a massive explosion to one direction. So I like, given the confluence of April being a generally bullish month, I'm initially looking for us to head higher first, right? So I want us to target this midpoint here first. So what is this? This is the consequent encroachment. Looks like we're already targeting the 5th. Okay, good. So this is the consequent encroachment of the wick, this weekly wick here. This is our first target. Of course, this is technically our first target, but we want to see price close above here if we are bullish. If we're bullish and we continue to see bullishness, then we can wait for us to target. Oops, let me get rid of this one here. Then we can wait to target this high up here. So what do we have now? This is our new IPTA high, our 20-day high rather, and it happens to be the 640 and 60-day high as well. So let's mark that out on our charts. So 18708.5, we're going to mark that out on our charts. Happens to be the new IPTA 62040 60-day high. So we're going to keep this on our charts here. And this is no longer a high on our charts. I think that we can, since this is no longer a high, we need to see, is this a potential low? Not really. This is still the highest high in the past 20 days. So I want to remove this one now since it's been referred to many times. I'm going to remove that one now so that, and I'm going to remove this here too, so that I can keep this 20-day high here. So within these past 20 days, I also want to mark this weekly low here. Okay, so this low is 18006.25. 18006.25. So this is our weekly 20-day IPTA low. And so I want to have this all the way out until the end of April. And I want to apply it as a weekly low here. So now, instead of this being our 20-day low, this is this new one up here. This is our new 20-day low, and the number needs to change so that we have it accurate here. So 1825, this is our new IPTA 20-day low. You can kind of see how in the previous weeks we had not taken a lower low on all of these. This is the old low, right? This is now a 40-day low. This is now a 60-day low. And I don't care about this previous IPTA 60-day low down here. We'll get down there if we get down there, but for the time being, we care about this month to this month. So April, the month of March, the month of February, and the month of January. And this happens to be the low on the month of January. So these are, I would say that these are our key levels that I want to make sure I have in mind, right? Let me get rid of this line here. I think that's distracting. And then I can make this a weekly line. And we want to drag this out to the end of the month of April as well. Technically, this is our 40-day low, so I want to project this out until May. Okay, and then the 60-day low, this technically should be projected out as well a bit further to the 60-day low. So April, May, June. So I'm going to apply that. So now we have our look back and our look forward, cast forward as well. So here, this is our new dealing range we're working in. So what is more likely? Is it more likely that we break through these bullish order blocks here to the upside? Or is it more likely that we come down and take out the 20-day low? That's what we're really trying to figure out this week, right? That's what we want to figure out. I think it's more likely that we are going to come up and take this first, and then maybe we can start our descent later on as we get closer to May. I think that this is our first initial target. So that being said, that's what we see on the weekly chart. We see that we're at an all-time high. We see that we continue to make all-time highs, but that you know, even though we like had a really nice big range these couple weeks, this inside bar tells me that it's ready to rip in some direction or the other. And so if this is a very bearish first week of April for some reason, I would expect it to come down to maybe this area, this old new week opening gap, and bounce at that point to head higher for the rest of April. If we were going to do that. Now, this week, it could just keep on going and going and going, but we do see a bit of constriction here. We have seen consolidation in the month of March. Now, remember, at the beginning of March, I was also saying that, hey, March typically seasonally is consolidating month. We saw that play out over the previous 4 weeks, and that has played out exactly to the T. So let's go down to the daily chart and see what we can find out from there. So we are hoping, and in this week, all I care about is being right on one of my biases, right? So my bias here is that we reach for this consequent encroachment first and foremost, right? So we reach for this first, and then we reach for the previous IPTA day high. Once we take this out, I would expect for us to do something similar to how when we took this one out, we took this out and we rejected a bit from it. I would expect for similar things to occur in the month of April. If we don't have that, then what we might end up seeing is something like, you know, maybe this month creates something like a relative equal high and then comes back down. maybe it busts through that high and creates a new high immediately, and this week trades down. The third week trades back up. The fourth week trades up. And then in May, you start to see some sell-offs. So if we see something to the opposite effect, if we see like a sell-off in April, for example, then that means a sell-off in April will be really, really, really bad for longs, because May happens to be a seasonally bearish month. So if we see a sell-off here, I'm going to be really, really, really intent on looking at this particular short-term low. Why? Well, that is going to signify a weekly shift in market structure if we break down below this low. If we have a displacement below it, then I'm going to expect this to be our shift in market structure as we head further down in May. So that's something that I'm consistently looking for. With an election, it being an election year, I don't know if that will happen, but let's see. Until that happens, we are assuming that we are still in a bullish trend. Until we see otherwise, we will stick to our bullish bias. Not to say you can't short, but you can clearly see that we had an inside candle here and things are constricting. So if this blows up higher in April, in the first couple weeks of April, be careful shorting. Third and fourth weeks of April, you'll have a lot more chances to do that. Russell, hey Johnny, good to catch you live. I'm actually in a long right now, waiting for price to get back into the 15-minute fair value gap and targeting the high. Cool. Yeah. Yeah, bold move trading Asia. But yeah, it does look like, we'll get down to the 15-minute in a moment, but I'm watching, I think that bullish order block is going to come down into that a bit and then maybe head higher from there and aim for that dotted line from the weekly chart. So let's go down to the daily chart now. Since we have our IPTA 20, 40, 60-day high here, we have our IPTA 20-day low, 40-day low, 60-day low here too. So let's go down to the daily chart now. And this is our most recent range. Remember, this is our new dealing range, right? This is where we calculate what's premium, what's not premium. So if we take this range here, split it in half, that was a pretty bad starting point there. Let me try and fix that up. So here we go. So if we split that in half, I would consider this portion to be a premium and this portion to be a discount, right? What do we have in terms of a discount down here? Are there fair value gaps? Kind of. There's this fair value gap here, right? That's remaining. That a portion of it would be a possibility of us heading down below. Now, if we look at the weekly chart though, if we're truly bullish, then price would have come down and we would find fair value gaps to go higher within the upper 50% of this inside day candle. And you can kind of see we've already busted through the majority of that with a little bit left of that candle in the previous week. So you can clearly see that you've got this candle remaining and of course this all-time high. Price does seem to be reaching for that very quickly right now. I think that this short-term high is the next draw on liquidity. So we'll probably hit 18,618. It's at 18,591 right now. I do think we're going to hit this short-term high, and probably if we take that one out, we'll probably take this day's high out too. But at the very first, we're going to take out 18,618.75. So on the daily chart, I do want to aim for and watch for this weekly consequent encroachment of that wick. It happens to be right at the daily chart too. So watch what price does here. If we come up here and take out relative equal highs, then there may be liquidity up here. It may like to take this point as a retracement to head higher first. So that's what I'm looking for in the coming days. Non-farm payroll week, so you want to be really careful. There's a high likelihood we're going to return back to this new week opening gap before non-farm payroll, just as a warning. And there's a high likelihood NFP is going to take this out if we're going to head higher, potentially. Since this is the upper quadrant, the upper half of our range, we're going to keep that in mind as we look for longs in a premium. So you can kind of see how like we're starting to get into some like territory where we don't want to be going long in a premium, but we see the trend is continuing, and the trend will continue until the commercials are telling us it's time for us to move. So for the time being, I like a movement up into this area. I would be hesitant to take this all the way back up here. I would wait. I think it's going to aim for this for sure. I would be surprised if it just completely blows up and just keeps on going and forgets everyone. But if that does that, so be it. We'll watch out for the next trade. I don't like going longs in this type of environment. We're in a huge premium. We're making all-time highs. Shorts that are shorting early are getting super squeezed out, as you can see here. So I think that there's probably going to be a bit more consolidation. You can kind of see it on the daily chart here that we've traded a lot up and down here. Then we busted that open, got some longs to FOMO in, and then we kind of like chopped all these shorts out here and then broke through that again, and then started chopping all the way down, but broke through again, or are in the process of breaking through. So while I am still looking bullish as we go into the month of April, I would have preferred to see maybe a little bit more than this little blip, but maybe that's indication that we're going to be going massively to the upside. We'll see. So on the daily chart, we are anticipating this is our draw on liquidity. Let's go down to the 4-hour chart. On the 4-hour chart, it becomes painstakingly obvious. Let me get rid of some of these old markings here. We don't need them anymore. Yeah, let me get rid of all these. Cleaner charts are nicer charts, right? Okay, so on the 4-hour chart, the consolidation has become very obvious here. You can clearly see that we're inching up, and we're consolidating, breaking out, going back, consolidating, taking out sell side liquidity, and then moving back upwards, displacing higher. Having difficult time, but still edging lower. Sell side got taken, sell side got taken, sell side got taken, and now we are heading higher. So, so what do we see on the 4-hour chart? Well, we see relative equal highs here and here, right? So this is a target. The weekly chart midpoint is a target. This rejection block here is a target right above the weekly midpoint, and the midpoint of these two is the next one, followed by the all-time high. So if this happens to be the lowest that we go for the beginning portion of the week, I wouldn't be surprised if we headed higher and then headed back down to this new week opening gap before non-farm payroll. Maybe we even head lower here. I don't know, but it's very possible that this reaches for this IPTA 20, 40, 60-day high. And because this is a relative equal high up here, I would look, if you're looking for shorts, I would look for evidence of us heading up here and then turtle soup, especially if this is like the first time we've breached above it, right? So see what happened when we breached above this high here and this high here, which were previous all-time highs. You can kind of see what happened, right? So in this case, all-time high, we head over, we don't breach it, we break through here, and then we just dump, right? Turtle soup entry, beautiful. Same way here, all-time high, we breach it, and then we start to sell off. These sell-offs are becoming less prevalent, so we want to be careful here of just going short, just, blindly. But if we do see some lower time frame displacement below us, I would look for that before going short. And then, of course, I would target back to new week opening gap. So the trade of this week, in my opinion, is to trade up to IPTA 18708, maybe trade above it a bit, and then look for displacement lower at this level. Does it have to go all the way back down to new week opening gap? No. but that is what I would consider to be a higher probability trade. Does that make sense, everybody? So let's see. Gamer X says, you're my liquidity, Russell. Russell says, lol, only targeting nearest high. Yeah, the nearest high is a wonderful target right there. Wonderful target, I think. Now, I am seeing something here as well. On the, and you can even see it on the 4-hour chart right now, but we see a lower low, lower high, lower low, lower high, effectively a lower low down here, and then a higher high so far. So I would look to see if this is a change in state of delivery for us to target eventually these 1, 2, 3, 4, 5, 6 forms of liquidity there. So that's what I would expect in the first portion of the week. I think that first portion of the week, I would look to trade higher. And then I would look to see if it if it breaks through these areas of liquidity, I would expect for it to trade to the midpoint here and see if it just barely spikes above this, maybe creating an additional set of relative equal highs, trading back down below towards this new week opening gap. And then maybe it takes non-farm payroll where it spikes down, takes out this, and this potentially, or maybe just takes out this area of liquidity down here. I would watch this week quite closely. Let me put it out on the charts. So this buy-side imbalance, I have a feeling we might reach down there. Let me see if there's anything on the daily chart, though. See, there's not much on the daily chart. There's this short-term low here. It's not even a short-term low. It's just a low of candle. Now, this happens to be a short-term low on the daily chart. So this short-term low down here is really close to the IPTA 20-day low. So I would expect non-farm payroll to want to take some of these out because that would be our reference point, right? If you can't see that really clearly, let me try to zoom in here. So notice how there's a higher low, lower low, higher low, right? So, and then there's a higher low, lower low, higher low, higher low, lower low, higher low. So this is a very, very important low. This isn't in what's called an intermediate term low. Here, these are still short-term lows. There hasn't been a higher low formed yet, but if there is, then this becomes the next point of clear market importance coming up next, because that happens to be the closest intermediate term low to be broken out. Okay. Okay, so going down to a 60-minute chart, an hourly chart. This looks really, really close to be like nice relative equal highs. This rejection block happens to line up pretty quickly here. I see that, you know, with this movement up that left a buy side imbalance coupled with a bullish order block, coupled with a liquidity void here. So I would keep this marked out on your charts. This liquidity void, it's a true liquidity void. There's no price action that happened inside of this void. So I would keep this on your charts and watch for price to at least combine with the midpoint of this bullish order block and with maybe the lower quartile of this liquidity void and the midpoint of this new week opening gap. I like a movement down back to this zone at some point. I'm not sure if it's going to be right here, but I do like the hourly move to this buy side imbalance area here. Now, this happens to be a 1 hour buy side imbalance here, right? So there's probably something on the 15-minute that we can look down at, right? So let's go. Let's go down to that lower time frame and identify what's possibly there, right? Okay, so let's keep this buy side on us just for reference. And then we'll keep this in mind that there's something here, but we want to look for something that's in the discount range of this, right? We don't want to be buying in premium if at all possible. That's a good way to get stopped out. Okay, so this is the 15-minute chart. Again, pretty large range here from this low to this high. Relatively nothing here, right? Like no obvious fair value gap. We have this huge one here. We have this potential as a mitigation block, this one here potential as a mitigation block, and a draw down here. So it's going to be unclear what direction it goes into unless it drops down into here and we see a nice reaction. So let's look at the 5-minute chart though. So again, 5-minute chart here. We see that we've got this range that we're working with right now. We see relative equal lows down here, right? So this is our dealing range on a lower time frame chart. And where do we get? We get to around here where we start to see optimal trade entries that line up with none other than the bullish order block here, the midpoint of this gap, of this new week opening gap, and the lower 75% of this liquidity void. So let's continue down, going even further, 1-minute time frame. So right now we see that we've got movement higher. We institutional order flow entry drilled from here up into here. It was a really nice run, surprisingly. You usually don't see those at the beginning of Asia, so I'll note that in my journal for later. But we do see us aiming for that old high. Remember, we marked this blue line. We marked that out. We know that that was from a previous rejection block and that there's relative equal highs here that could be targeted. So I do think that we're going to target those. We'll keep an eye on this to make sure that this doesn't turn into a bearish breaker, okay? Now, I don't think it's going to break downwards just yet, but it could, because what did we do? We took this, and actually this is supposed to be an old new week opening gap. So we broke above this old new week opening gap. We traded to the bottom of that new week opening gap and then continued higher, took out all these early shorts, and now are consolidating and slowly stair-stepping lower. Now, I would expect for us to come down to this consolidation area and then maybe this area here before we headed higher. So I'm going to keep an eye. First thing I would keep my eye on would be this buy side imbalance here. So this one here. So that's a 1-minute buy side imbalance. Within, that's the only imbalance that I see that hasn't been fully traded to, and we've got a bullish order block here. That's why I like a return down to that. Now, there's also this one here. If you don't see it, technically there's another one above it right here, right? And we're closer to this one occurring. So, is there a fair value gap that's tied directly with the bullish order block? Not as well as this one. So I think we'll end up trading through this consolidation, heading down towards this area of original consolidation. And then that's where I would look to see if we turtle soup below. Maybe we take this low and then head higher, and we don't give any shorts the ability to cover, essentially. So I'm watching these two closely. I'm not going to trade today. I'm not going to trade tonight, rather. But this is all within the pretext of watching very closely what our new week opening gap is doing, what our liquidity void, if we're going to fill it in the beginning, or if we're going to take out a buy side liquidity first and then come back down and fill it. But I do think that sometime this week, this is going to be a very important level. So be watchful of this. Okay. Probably by Wednesday, by Wednesday, we'll return back to this, I would assume. Sorry, I missed a few things here. Let's see. Russell added to my position inside this 15-minute fair value gap. Let's go back to the 15-minute here. Okay, so you have this 15-minute fair value gap here. That's hasn't been fully taken advantage of yet. We traded down to this bullish order block here, but keep in mind we're in a pretty heavy premium here. So this high, low, higher high, if we end up seeing displacement lower, your stop needs to be, and this is a pretty big stop there, your stop has to stop yourself out at the low of this candle, this fair value gap, because this could continue heading lower and turn itself into a bearish breaker where it trades below this short-term low here, maybe dips down, maybe it dips down like there, and then we see a return back higher where we see one of these things to the breaker here, and then we see a down close candle as we head lower and lower into this fair value gap, right? Something like this, I think. Maybe not that drastic, but I think we'll get something kind of like this, maybe, where we see an initial reaction here, and then we go even further down into this, further as we trade, kind of like, and this is all, I'm not sure if this is actually going to play out like this, but something like this where we would see us trade down to, something like down to here, I don't know if it's going to play out like that, but this is why, like, if it does trade down that way, then you need to be out of this. If it closes beneath this fair value gap here, and it disrespects the midpoint of this mean threshold here. So if it closes below the mean threshold of this bullish order block here, or down close candle in a premium, then you need to be really careful. At most, this fair value gap is your last line of defense there. So if it closes below that, though, it's gonna aim for this short-term low. So does it have to do that? No, but it is a possibility, right? It is a possibility. So it does look like right now it's taken a little bit of a jump here. It's traded through the midpoint of this gap so far, right? So if we take a look at this gap here, we see that it's traded through the midpoint, hit the optimal trade entry level, dropped down to the 79% optimal trade entry level, and is now creating an inside candle. So similar concept, and if it remains an inside candle for the next 11 minutes, then there's a move higher or lower that's going to come much faster, I think. Let's see. Stop is tight since it took out relative equal lows here. Yeah, I see that. Stop is tight at 18,581. Okay. Yeah. Just be wary that since there is another fair value gap, remember what are the rules, right? If there's two fair value gaps, you have to be ready to allow price to head down to the lower one, right? Whenever there's two of them there. So you might get stopped out. It might head down to here and might just bounce back after that. It might just be like a wick down on the 15-minute chart, and then maybe it closes within this area and then heads higher, that's also a very, very much so a possibility for sure. Okay. Let me take a look at our real-time hour chart. So this was the real-time hour chart on Friday. You can kind of see how we traded up. Well, that was 2 days ago. I wasn't here on Friday technically, but this was Thursday, and we're now gonna be at the new one soon. Let's see if I can grab this. It's not gonna let me play, huh? Come on, there we go. All right, so let's set this at the new real-time hour gap. So we did see that this one started here and it opened here, and we traded all the way through that real-time hour gap, right? So to this one, we can see this opening or this closing here, and right now where price is at, it's up here, right? So you're gonna have a huge liquidity void downwards, and that's why I think that we have a setup for us to head back down to this liquidity void, at least to this mitigation block first. But I would venture to say at some point this week, if not today or tomorrow, then Wednesday for sure, we will be hitting that. Watch where price goes here very carefully. Make sure this doesn't turn into a bearish breaker and knock you out. So I'm going to keep this down here for the time being, just because I don't know where we're going to start off tomorrow. And yeah, so I think that's really it for the week. That I think that my bias this week is that we are going to trade higher for a little bit. We'll take out or get near to that IPTA 20, 40, 60-day high, maybe create another relative equal high or turtle soup, and then maybe head back down. I don't know if we're going to head down here today, but maybe it takes out these relative equal highs first and then heads immediately downwards to this liquidity void. So I would look for that next, honestly, because what is forming here, retail is looking at this and thinking, oh, this is a bullish flag. This is breaking out of this bullish flag, because typical retail is like, drawing these kind of lines, right? Where they're like, oh, this is the bull flag, this, maybe they're drawing something like this and they're seeing a breakout, right? So if I were a market maker, I would be recognizing this is a retail pattern and there's going to be a lot of people going in long. So what would I look for? Well, I would look for liquidity to be taken here from previous shorts, right? Shorts that went here, defended here, defended here. These shorts are underwater, these shorts are underwater, and these shorts are underwater soon too. And what else is over here, right? Do you see that? Right there? So what is this? This is a 15-minute sell side imbalance, buy side inefficiency, right? So I like setting this on my charts for today and tomorrow. I mean, what you see here, right? You see relative equal highs. You see a sell side imbalance. Do you see any other sell side imbalances up here? There's a tiny one up here if you look really closely. Very small one up here. But other than that, nothing else, right? So do we need to be aware of this one? Yes. Is it big enough to cause concern? Not really. But I am aware of it, right? So, but you can see how many more confluences are here for this weekly consequent encroachment, wick consequent encroachment, combined with this sell side imbalance, and this liquidity void being a draw on liquidity for us to head to after taking out these confluence is here, right? So what I think is going to happen this week is we're going to come take this out eventually. Maybe we do a wick up on one of the big economic events that's happening. Maybe Jolts takes us up there, gets people long, just comes short. Maybe we see a failure swing. We head back down middle of the week or Tuesday or Wednesday, target the liquidity void that's here, and then kind of like create maybe another relative equal low down here. And then once we do that, non-farm payroll, I think we've got liquidity waiting here. So once we take out this liquidity pool, maybe we take out this liquidity pool and this liquidity pool for non-farm payment, take out this side here, and then head upwards for the rest of the week after Friday. So that's how I'm framing my week in terms of sheer NASDAQ only, right? So NASDAQ only, that's how I'm framing my week, if that makes sense, folks. So hopefully that makes sense to you. Let me know if there's any questions. We're going to take a look at dollar index as a final cap to our theory. So remember, we were looking for dollar to rise up last week. And what did it do? We had it rise up, right? It went down first, yes, but we had it rise up and targeting this short-term high here. So do I expect this to continue to aim for this high and have our markets go lower? Yes, absolutely, at some point. But now what do you see here? So you can kind of see a weekly buy-side imbalance has formed, correct? And you have this dealing range. What happened here? We came down below 50%, almost to the 62%. We didn't quite take this out, right? Created a higher low and ended up busting through that for the past few weeks. So what has happened with the markets? We've still continued to inch higher. So we have a slightly decoupled market. So can this reach for this high while making all-time highs? Yes. So you have to be careful, right? You have to be careful with this. I do think that dollar can reach up here. Does it mean we're going to sell off? Not necessarily, but maybe temporarily. So I'm watching this really closely here. I do think that it can reach up here because there is a bearish order block here. We reached to it one time. And if we reach it again, maybe it creates another high and sells off down here. That would allow us to continue heading higher for the short time. And then maybe we continue in the following weeks to really break above here, break above this sell side imbalance and target these relative equal highs towards the end of April. So we'll see how that plays out though. I don't know what's going to happen here. This is still a really, really weird in-between range that we're in, which we don't like to trade in, right? Yes, we do see the dollar has a daily imbalance up here that's outstanding. So I am considering that, of course. That there's outstanding imbalance here that we haven't filled. There's a liquidity void up here that we haven't filled. So all of these I'm still looking higher on the dollar overall. Yeah, I still see us heading higher overall, even on the higher time frame charts. If I look at the monthly chart, for example, we've been overall failing to go higher, but once we took out this huge liquidity pool down here, and then we protected that, and we saw this shift in market structure higher, and we treated these as mitigation blocks essentially. This leads me to believe that this is the terminus, and then this is first stage accumulation, and then this is going to be a second stage accumulation here, followed by a finish of this market maker sell model up here. And then we'll head higher, and it's going to be a horrible next year maybe, but we'll see. It takes a long time for these to finish, right? So Johnny's right, though. I find Asia session does seem a little bit harder to trade. It's just a little bit slower. So if you can still trade it, I would risk down because sometimes you get some really ridiculous moves based off of Bank of Japan. So if you're going to trade Asia, you have to pay attention to Asia's economic events, because those can really cause some serious damage, especially interest rate announcements. So Russell, definitely try to trade it, but definitely be open to trade it. I know plenty of people who are successful at finding their trades, 10, 20, 30 handles. As you can see today, it's run quite a bit as well. At least on NASDAQ, it's run quite a bit. But does it happen a lot? Not really. It's just a lot more smaller movements. You can see all these areas. Let me go to the 15-minute chart. It might be easier to see. All these areas in red, these are Asia session here. You can kind of see how a majority of them are some form of consolidation before a larger move. Consolidation before a larger move in London and New York. Some smaller consolidation before a larger move in London and then New York, right? Slight consolidation before a larger move in New York. Consolidation before nothing, right? Continued consolidation the rest of like Thursday. That was a horrible day. And of course, you have this kind of a move in Asia, essentially. And, well, we'll see if this consolidates or if we see a continuation in London to take out buy-side liquidity. So, Jay Whitway, always time well spent, bro. Thanks, bro. Appreciate you, Jay Whitway. Yeah. Okay, so I think we're getting close to time. It's 10 o'clock, so let's see how the week plays out. Make sure you have your higher time frame charts ready to roll. Be weary. Watch, I would expect for short-term highs and intermediate-term highs to be traded to, and then turtle soup entries for those short. So that is it for this week. And so we're going to stop there. I think it was a pretty nice longer session from a really difficult week. I don't know if you guys noticed, but we got some swag from Apex Trader Funding. So they gave me a really neat little hoodie here. They will typically allow you to get some cool swag too when you start to see some cool profits. So, or if you have like, you know, affiliate income too, and you're bringing them business, there's a few of you who have been who've gone through and learned about Apex through me. So they have some kind of cool merch there. So very fortunate to be with this firm. I stand by them. There's a lot of really shady Forex firms out there right now. And Apex is one of the ones that my mentor entrusted to me. And my mentor, I trust him as well, because he's a data fiend. And he always looks for the best of everything. And yeah, I think it's a good place to train, good place to learn to be a great futures trader. So yeah, I think this week, you know, my accounts are still good. They're still in really, really good standing. I didn't really make a lot last week. It was like, you know, $50 here, $100 there, $10, $20 on one micro sometimes. So it was really tough to trade last week. So if you got hurt last week, you know, I understand. It was a very difficult week to trade. So watch for the expansions this week. I would anticipate that we get something large or larger in this week moving forward. So yeah, I think I'm gonna just I'm gonna keep my risk low for the time being. I'm gonna look for the turtle soup at the 18708.5 that 20, 40, 60-day high. If we don't get that and it just blows through that, well, that's April seasonality, right? So so yeah, make sure you trade safe. Don't go too crazy tomorrow. If there's a trade, go for it, and at your own risk. But for me, I will not be looking for any major trades tomorrow. I'll be observing, but I won't be streaming. I won't be looking for any major trades. If I risk some, it'll be 1 or 2 contracts, micros at most, maybe 2 to 4, depending on the account, which is 2% risk maximum. Okay, so you don't want to be going crazy the day after a holiday. Okay, so with that, I'm gonna go head out now. I got a lot of stuff to do. Got to catch up with the wife a little bit. So yeah, everybody, hope this was helpful in preparing yourself and thinking about what could happen. You always want to have your bias, and then you want to have a contingency plan, but give higher impetus, give higher weight to your bias, right? So you might have a different bias than me. Totally okay. Both shorts and longs can make money in any market, right? You just have to make sure you're really pristine with your choice of setups. So with that, thank you very much for joining. Folks, I hope the folks that are trading, I hope that you are able to make a really good amount of cash here. I think GamerX said he was going short, so looks like he got to this first level here, and we'll see how things get to, see if it heads down to this before heading higher potentially. And of course, if it goes through that, then, well, we have this whole area that is ripe for the picking, which very well could happen in London. It could go back and retrace all of this. You could certainly do that. So be careful. Be careful long. We're in a premium here. So this buy side imbalance is technically a premium. So you'd want to see it head down into this 50% area before heading long. And then you don't want to see it close below that buy side, that down close candle here, because if so, it's going to be prone to heading down to 18,539 as its next level. So, okay. Good luck this week, LP Trade says. Thank you, you too, LP Trades. Appreciate it. All right, Jay Whitway, Russell, GamerX. Appreciate you hopping on. For everyone else who's here, get some rest, stay hydrated, and we will catch up soon. All right. If you have any other questions, appreciate you if you gave this like or subscribe. It helps the channel out greatly, and so I appreciate it if you pound that like channel or like button. But if not, hopefully I'll see you here again. So we'll see you on Wednesday. I'm flying out on Thursday night, so I will probably be able to trade, but I probably won't be able to stream on Friday. So Wednesday is going to be the core day that I'm able to stream. So, all right. Have a good night, everybody. Take care. Sleep well. Get some good rest. And we'll chop it up and see how Tuesday and Wednesday this week unfolds before non-farm payroll. Have a good night, everyone. See ya.